Dow Jones Industrial Average passed the 13,000 mark.
Another milestone for the market, 14,000 on the money.
Record-breaking kickoff to the fourth quarter as the Dow Jones Industrial Average closes at a new all-time record high.
Generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. We're down over 16%. Dow at the same time has fallen about 18%. The stock market is now down 21%.
Because we're now down 43%.
Was the worst day on Wall Street since the crash of 19...
Established in 1817, the New York Stock Exchange allowed anyone to invest in or support a company that they believed in. Stocks became a powerful tool for companies to raise money and for individuals to try their hand at beating the market by investing in the next big company. Although the stock market provided opportunities to get rich quick, it also created the opportunity for individuals to have their life savings decimated within the span of one trading day. The most notable instance of this occurred on Black Tuesday in 1929, when the Dow Jones lost 50% of its value, throwing the American and world economy into the Great Depression. More recently, the dot-com bubble of 2000 and the Great Recession in 2008 left millions unemployed and devoid of their life savings. Alarmingly, the Great Recession coincided with an increased suicide rate, exemplifying the high-stakes game that the stock market has become. Although the stock market is not inherently prone to deep play, the addictive properties and high stakes create the perfect conditions for some to descend into the realm of deep play. Trading of stocks fuels our capitalistic society, as all who play are looking out for their personal interests and trying to make the most profit, no matter the consequence.
For the individual, the most appealing aspect of the stock market is the potential it gives you for massive financial gains in a competitive environment. In any competition, there are winners and there are losers, and the stock market is no different. Some are willing to go to any length to make a quick buck. Those who engage in insider trading are willing to risk spending years in prison if it means that they may earn a couple $1 million on a favorable trade. These financial practices closely resemble gambling and the high-risk, high-reward mindset in which people continue to put in more money in the hopes that their next trade will be their lucky break.
Some have become so attached to and financially dependent on the stock market that a crash can make their future seem hopeless. Economic crashes bring with it a wave of economically related suicides. According to the University of Oxford, the 2008 market crash resulted in over 10,000 economic suicides. These people had attached their identity to the success of the stock market, and when the stock market failed, they viewed their financial losses as a personal failure. People like to think that they are smarter than the market, when in reality, no matter how much time you spend studying and analyzing market trends, it's impossible to consistently predict the future of the stock exchange.
The stock market embodies the greedy and capitalistic blood that flows through the American populace at large. Even when people have already struck it rich in the stock market, they are never truly satiated with the wealth that they have. 84% of stocks are owned by the top 10% in the United States, reinforcing the modern American oligarchy, where the rich control the market and the health of the economy. While this modern form of oligarchy may seem repressive to the majority of the population, many are still willing to defend its existence in the hopes that they one day will become wealthy enough to benefit from the rules that have been established to keep the rich rich. Although America has a progressive tax system, it does not disperse wealth nearly to the degree of many European countries that take a more socialistic rather than capitalistic approach to wealth distribution. This can be attributed to the greedy values that American society fosters, in which the wealthy do not want to give up their hard-earned money to the less fortunate. A lack of wealth is associated with laziness, and in our society, we are often taught to think that if someone is not rich, it is their own fault because they did not work hard enough or long enough. In reality, systematic sexism, racism, and classism forms the foundation of our society and represses anyone that is not a rich, white man.
Boom. The capitalistic system that the stock market values is seemingly representative of the American dream, when in reality, it's more of an American nightmare. The American dream promises equal opportunity for all. and preaches the idealistic view that anyone can make it in America. Unfortunately, for those hoping to play the stock market, this is not the case. As we previously mentioned, the economic elite control the majority of stocks in the market. Not only that, but discretionary income is necessary for any sort of investment to be made in the market. For those living paycheck to paycheck, investing in the stock market is a pipe dream, reserved for the rich rather than the easily accessible land of opportunity that it promises to be. This is yet another example of the hypocrisy of American society, where instead of being able to make it if you work hard, you're stuck in a cycle that perpetuates the class divide.
The stock market is a game, with competitors playing against one another to make the largest profit. Americans are inherently competitive, as is reflected in fierce protections for the rich and lack of sufficient government support for the poor. The stock market echoes these competitive ideals, and that there always must be a winner and a loser in the market, because there's always someone on one end of the transaction who is worse off as a result of the movement of the market. The need for people to feel smarter and more successful than their peers is fueled by the stock market. While there are clearly defined winners and losers, the stock market is merely a combination of competition and chance, with no significant skills involved.
Despite the amount of luck required to succeed, too many people allow their value as an individual to be entirely dependent on whether or not they're able to beat the market. If your investment in the market pays off, you get a sense of adrenaline that accompanies winning. If you lose, you are often left with the empty hole that can only be filled by investing more, with the hopes that the subsequent investment will yield a profit. This creates a self-perpetuating cycle where you can never make enough money because there is always a potential to make more money or keep winning. The stock market is the perfect environment for deep play because the dream of winning continues the cycle of investment, which can never truly end because the potential to make more money always exists. The stock market is not always the evil entity that we've painted it to be. For the majority of Americans that choose to invest in the stock market, it simply marks a safe investment in which they can passively put their savings or retirement funds and watch it grow over the years. Viewing the stock market as a game rather than a sound financial investment is when the line between smart play and irrational play begins to blur. Only when people try to predict the day-to-day movements of the market or make a massive return in a short period of time do they enter into the territory of deep play.
One such example of an individual for whom the allure of making money and the fear of losing money led to the loss of all rational decision-making is Martha Stewart. In the early 2000s, Martha Stewart was an immensely successful self-made multimillionaire and CEO with a net worth of around $700 million. Then, in late 2001, Stewart received a tip that the pharmaceutical company ImClone, of which she owned about 4,000 stocks, was not going to have their drug approved by the FDA. The day before this announcement was made public, Stewart sold all her shares of the company. By selling the shares in the firm before the share prices tanked, Stewart saved about $45,000. Although that is a fairly substantial amount of money for the average American, Stewart had a net worth nearing $1 billion. For her, the money was more symbolic of a loss of rational decision-making when faced with the potential to avoid humiliation of a failed investment decision. Stewart's stint with insider trading resulted in hundreds of thousands of dollars in fines, 5 months in prison, and her being forced down as the CEO of her company for the next 5 years. This humiliation surely would have been more of a loss for her than the $45,000 ever could have been, and further shows how people's obsession with winning in the stock market can ruin their lives. Okay. The deep play aspects of the stock market closely resemble the overly invested approach people take with gambling. The stock market is just another vehicle through which people hope that they may be the one in a million to actually strike it big, which is no different than the lottery or than gambling. Just like gambling, people love the idea that with just a tad bit of skill and a lot of luck, they may secure their spot in the echelons of America's most elite. Just like gambling, the stock market is a dangerous game to enter into. Once you develop the mindset that the next investment will be the one to make it big, it is hard to break out of that and see that the odds are eternally stacked against you. Because no amount of genius can predict the future swings of the market, just as no amount of genius can pick the winning lottery numbers.
The concept of winners and losers that is fostered in the stock market permeates into other aspects of American life as well. The current polarization of our nation's politics perpetuates the winners and losers mentality, where when one side of the aisle passes a bill, it's a loss for the other side. The shift in mentality from working together towards a common goal to instead working to beat the other side has made its way to the highest levels of society, including to our current president, who seems to be obsessed with winning.
We're going to win so much. We're going to win at every level. We're going to win economically. We're going to win with the economy. We're going to win with military. We're going to win with healthcare and for our veterans. We're going to win with every single facet. We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win so much.